Will you be part of the massive layoffs that look like they're happening right now? You came here for the truth, so let me unveil that for you. Have we seen the end of this recession and now we've soft landed and we are now headed for better and better statistics coming through? Well, look at the last GDP numbers that came out. Apparently, the economy is growing. The unemployment rate is so low. Is any of that real? In today's video, we're going to talk about the truth instead. I want to show you what's actually going on, and we are going to bring up some data that will be shocking to some, but not to those who are regular viewers of this channel. Let's begin. First thing, we need to figure out what's going on. Well, you'll see this now. You go into the stores, and I couldn't believe this for myself. I believe it was CVS, okay? And what they're showing you here is they have products, regular everyday products, instead of just having them on the shelf. Other stores are locking them up. But in this store, if you want your toilet paper, you've got to push a button, wait for the staff member to come and see you, and then they're going to bring that to you. Look, the stuff is in a picture frame. I mean, you couldn't make this up. But that's the world we live in today. So keep that frame in mind as we move through this video. It's shocking. The things I hear about. I mean, it is just a warning that this is coming to an end. All of the nonsense is coming right now to an end. Look, the numbers absolutely do not work. It's a fantasy. This is Stanley Druckenmiller, one of the most legendary investors of all time. And he's with Paul Tudor Jones, which was amazing to see the two of them together. That's the underlying reality of the entire global financial construct. Low rates made it all possible, and low rates are the only mathematical, quote-unquote, solution to sustainability. All roads lead to intervention. Absolutely. At some point, they're going to have to cut interest rates and print a lot of money. Not now, but at some point. And the longer this goes on for, of course, the more devastating it's going to be. And that means that they're going to need to print even more money at the end of the day. That is what they do. That's all the central banks can do. And so Druckenmiller is basically just talking about what has happened recently. And I want to make note of it. You have the government. They need to spend money. And they do so, when they do that, it's not as if they just snap their fingers, although kind of is. We got to understand they do this and they have to take their debt, package it up, and sell that to an investor. They do it at these auctions. And so what happens is you have a bunch of buyers. Let's say, okay, we're going to sell $1 billion of this debt. They sell that debt at a certain rate. Okay, we're going to sell 10-year at 5%. We're going to sell 30-year at 5.1%, whatever the case is. So you get all these buyers. Okay, great. But the more debt that they're issuing, it basically means that they have to increase those numbers. Not 5%. Oh, it's going to be 5.2. It's going to be 5.5. It's going to be 6. On and on and on. And so what Druckenmiller is saying is they can't pay this back. How are they offering this? They cannot pay it back. And so that is a big, big issue right here, because it means that at the end of the day, the Federal Reserve has to come in and print cash like never before. To me, that is extremely worrisome for all those people out there who were waiting and pleading and begging for some sort of moment when we can get prices to come down to a reasonable level, that our inflation wouldn't be so bad that we could just pay the bills like normal. But unfortunately, it looks like this, by the way, intentional, is happening, and we're going to see the effects of it, and it will be unlike anything we've seen. It'll be worse than the 1970s, and we're going to go back into a time in which people, nobody today has experienced. That's the reality of these circumstances. I have done the studying. I have seen the patterns. I have recognized these, and it is an unfortunate circumstance for many how they will suffer. This is interesting. Okay, so this is a report from the Dallas Fed. And look at the second note. In a consumer business, we are hearing a lot more, quote, I can't afford this, than we ever have before. Directly from the Fed. They're saying that. They're getting the quotes and they put that through. I can't afford this. Things are too expensive. Everything's too expensive today. But does that mean that they're going to bring their prices down? Hasn't seemed that way. Did you hear about McDonald's? Oh, yeah, the stock went up like crazy. Why was that? Because they brought their prices up even further. I'm pretty sure they said they were going to stop bringing their prices up, but they inched them up even more. In some places, a Big Mac combo was, in the US, it was $13 and change. Other places went as high as $18. I don't know how that could even be. But you're not getting exactly the best food. I don't know. If people eat it, I'm not trying to say anything to you, but, $18, $13 even. Unbelievable the way that the prices have come up. Do you have any say on this? What do you think? You got companies like McDonald's increasing the prices, but they're not the only ones. It's not, oh, McDonald's, you're bad. Every company seems to be doing this. In my personal circumstance, in my business, I have left the price the same for years now. And trust me, I'm getting squeezed. It's squeezing me big time. Very much so. And, you try your best to keep prices so that the consumers are able to afford it still. There is a certain ceiling. So that's my point. Less boo for your buck. For the second Halloween in a row, U.S. candy inflation hits double digits. And, this is the time of year where people are buying up the candy. They're buying it in bulk, getting these little chocolate bars and things. But the prices of that has gone up dramatically. So just over the past couple years, and of course, it's nonsense. Whoever believes the numbers that the government shows, it's nonsense. It is complete nonsense. I didn't know that they had this, by the way, this index. They've got an index for everything. But you could see it, US CPI, candy and chewing gum, not seasonally adjusted. And you could see over the past couple of years, just skyrocketed. All right? Part of that is the price of cocoa. So that has gone up. Of course, if chocolate's gone up, well then, you're going to get everything down the line. But what has Hershey's done? Well, yeah, Hershey's has increased their prices 7 quarters in a row. 7 quarters in a row, I believe it was. And that was 7%, at least 7% each time. Does that add up to the 3% inflation that we're being told? Let me think. Nope. All right. Well, anyway, what else doesn't add up? Well, healthcare costs. And by the way, healthcare costs, even in socialist countries like Canada, it is still going up because not everything is provided to you, obviously. And if you want to skip the line, the very, very, very long line, in some cases, well, then you pay to play. But anyway, a family's health insurance cost nearly $24,000 this year after the biggest increase in more than a decade. And so we can see that it's healthcare, it's chocolate bars, it's McDonald's, it's all services have gone up one by one by one. Why? What's happening? What is this all about? Well, let's take a look first at this. Home buyers are backing out of deals at the highest rate in a year as surging mortgage rates slam the housing markets. There is an issue here that there's way too much debt. And of course, people can't pay it. So they're backing out. They're starting to say no to those projects. Real estate developers are starting to say no as well. Wave of job cuts, probably just the beginning at Canadian banks. Scotiabank, BMO, RBC look to reduce headcount. They, in fact, have been doing this. Other banks as well. What about the crisis that's going on at these banks in the United States? Could be Citi, could be Morgan Stanley, all of those, you can see how terrible they've been performing. What do we know for sure? Well, understand this with the banks. The number one thing is that there are these commercial real estate loans that are out there that are not going to be paid back. We know that, okay? And so that's going to be written off or written down. And that's a problem because there's, number one, way too much, but they are overwhelmingly related to the regional banks, the small banks. And these companies here, I mean, their stocks are taking a hit, but of course their companies overall can't afford these things. They can't afford to take the hit like that. So there's going to be more failures. There's going to be more of a problem, and people don't understand how that's going to tumble. When you see that, there will be more bank failures unless there's some sort of bailout, unless there's some sort of measure that comes in to change this. They can go cut interest rates today, and maybe they go and you renegotiate that debt. Remember, commercial real estate is operating on shorter time frames. It's not 30-year mortgages here. And so shorter time frames, they're always doing this. They're always trying to get refinancing happening every so often. The ownership is changing hands every few years. It's different than single family homes in the suburbs, okay? But one bank, whether it's in the United States or whether it's in Canada, they're going to experience a problem connected with the debt because mortgage rates and interest rates are too high, and there are these things that are affecting them, and they can't get around it. The only solution, if we don't see interest rate cuts coming in the relatively near future, these companies are in big trouble, and they could lay off more and more and more. What will happen at these companies? If they lay people off, well, who would replace them in the end? They need to hire them back later, right? Well, not exactly. As baby boomers retire, German businesses turn to robots. That's one example. Just one. What about this? RoboStrop. Fury as 13,000 robot used by council to paint the lines on the football pitches. You see that as well, right? Lots of different robots out there for everything. Flippy 2, the robot. You've heard of that. Chippy, the robot. Avocado. These are real things, my friends. Okay? I think it's crazy. But that's where we're at. There's a cycle that's going on right now where we are seeing people that will be laid off, but there's a period of time. Maybe it's a recession for a year. Maybe it's, unofficially a recession for a year, let's say. But when they are ready to come back, economy starts growing, well, then what happens? Well, they don't need them anymore because Flippy the robot's doing that job now. They were willing to invest the $30,000 into Flippy and not pay that money to that employee that says they want a raise. No, we don't want to give a raise. No, we don't want to deal with the increased healthcare. We'll deal with the robots. They got problems, we can fix them. And so that's what's going on. Look, if you want information based specifically around these different conditions, it could be something about uranium. It could be what's happening with gold. It could be anything. You want to know that specific detail? Well, then you can't just go randomly online. You've got to go to where, I find a lot of information that is Seeking Alpha. Now, Seeking Alpha has the paid version, which I'll link to in the description, which looks like this when you go inside. And why I like that, let me explain to you, is that when we have traditional articles, even the free stuff on Seeking Alpha, anywhere, Bloomberg, wherever, they're not really writing an article to inform you. They're doing so for search engine optimization. They need to bring eyeballs in. So you're getting an article that's might not be the best information for you, but they need to stuff these keywords in there, and that's just the way they're told. Okay, and so we can see that happening all the time, but when you pay, when it's behind a paywall, when this information isn't seen by the search engines, well, then it makes it, gives the author basically freedom to just write the best possible articles, to look at the best analysis, give you that best detail, and not worry about all that stuff. So that's why I like it. Check out the 7-day free trial that they still have going on right now. The link is in the description. I hope you'll check that out. And we have the comment of the day. Anthony says, I'd laugh my off if Jamie Dimon uses the cash that Jamie Dimon sold a bunch of stock, that cash to buy a big farm in the middle of nowhere and retires from banking. Wouldn't that be interesting to see? Well, I don't know what we're going to look at in the near future, but let me tell you, when Jamie Dimon, or Demon as we call him, when he sells off a big chunk of shares, which he's never done before, when he's doing that, what does it tell you about what's happening with the banks? To me, I think it's a little bit of an indication of what's to come. What do you think? Anything? Let me know in the comments below. Let's have that conversation going. Don't forget to hit that thumbs up. When you do, you're supporting the channel. And of course, I'll see you on the next one. Take care.